Many companies these days are seeking to cut costs by dropping their pension plans, which is causing many employees to look at income-producing products like annuities. Here to discuss this is Gerald Simon of Simon & Simon International in Louisiana, a firm specializing in independent financial planning and insurance solutions. Gerald, it's a great pleasure. Thanks for joining us.
Thank you, Scott. It's good to be here.
So talk about pension plans. Why are they so valuable and what's replacing them?
Well, when you get ready to retire, where's the money going to come from? Because you're no longer on a salary. One of the interesting things, if you look back into the history of pensions, first of all, as I recall, the first pension plan was instituted by International Harvester. I don't remember the exact date, but trust me, it was decades ago. Up until about 1980 or 85, somewhere in the 80s, 80% of all pension plans were defined benefit pension plans. A defined benefit pension plan works something similar to this. You've been there 33 years, at 3% per year, that means you would retire at 99% of your, quote, covered compensation. Covered compensation was generally defined as the last 5 years that you were working with your employer. Today, however, the vast majority of pension plans are 401k plans, and there starts the problem. 401k plans are generally invested in the market. Unless you've been living in a cave, you know what's happened to the market with its increased volatility over the last several years. So people were faced with, look, I took a bath in the market. I don't have a defined benefit for my retirement, so I've got to have something that will guarantee my income so I don't have to sweat and see how much my check is going to be on the first of the month. Along comes annuities. Annuities provide a specific income per month, and if you are fortunate enough to get a professional advisor, the annuity will have a guaranteed income for life that you cannot outlive. And if you have a good advisor, they'll also see to your wife or your spouse, whether it be a man or a woman, in whatever the situation is. In other words, when the participant, the retiree, dies, an income stream continues to the surviving spouse. That is critical in selecting the type of retirement instrument that you want to have.
Great, Gerald. Thank you so much.
Thank you, Scott. It's a pleasure to be here, as always.
That is Gerald Simon with Simon & Simon International in Louisiana, and this is Annuity News Now.